Welcome to another edition of Hours and Minutes, where we take hours of information and condense it down into a few palatable minutes. With me today, we have Brian Seigel. Brian is BUI's Director of Advanced Planning and a former private practice estate and business planning attorney. So, Brian, today we're talking about the federal gift tax. There's always so much focus on the federal estate tax, but the gift tax is an important transfer tax to be cognizant of. Would you mind taking a minute or two and explaining what the gift tax is and what the limitations are?
Sure, Brant. So you're right. There is a lot of attention on the federal estate tax and probably less attention on the federal gift tax. But the truth is that we have an exemption, $11.58 million in 2020, that is both used for estate tax and gift tax purposes. So it's one exemption, one and the same, where if someone were to gift away $2 million during lifetime, it means that at death, they could leave $2 million less that would be free of federal estate tax. So that's in essence the way it works. And the tax is 40%. So it's a hefty tax rate, one of the highest tax rates that we have. And that said, there are certain exemptions from that gift tax. Now, I mentioned the lifetime gifting exemption. That's certainly one. Someone doesn't actually pay gift tax when they make a gift. Instead, it would just come off of their lifetime exemption. But in addition to that, there's also annual exclusion gifts, which would be giving away $15,000 to as many individuals as you would want in a given year. And that is a number that is indexed for inflation, rounded up to the nearest $1,000. But that is probably the most frequent gifting exemption used. But there's also an unlimited exemption for medical purposes, where as long as the donor, the individual giving the gift, makes the gift directly to the hospital or other medical institution, then it's going to be completely free of gift tax and wouldn't be subject to any of those exemptions. And same goes for education purposes. As long as a gift is made for tuition directly to an education institution, then there is no gift tax that has to be paid, and that's unlimited.
Very good. So you mentioned annual exclusion gifting, and it being indexed at 15,000. So to put into context, let's just say, for example, we have a 7-year-old couple that has 2 children and 4 grandchildren. And those are the trust beneficiaries. How much can they gift into that trust without dipping into their lifetime exemption?
Yeah, good question. And so we're talking about gifting to a trust that ultimately has 6 beneficiaries. But if both husband and wife are gifting to this trust, they can each use their annual exclusion gifts of $15,000. So that's $90,000 that each spouse would be able to gift to the trust. So $180,000 total. And you think, okay, $180,000 is certainly a lot of money. Now, if it's an ultra high net worth client, $180,000 might not sound like quite as much to help reduce estate tax that's 40%. But when you consider the fact that it's removing that $180,000 plus all the future growth and appreciation from that sum, it can have a very strong effect to help limit the size of the estate, reduce the size of the estate for estate tax purposes in the long run.
Got it. Now, is there value in gifting appreciating or income producing assets out of the estate?
Absolutely, yeah, and that's one of the great benefits of gifting. And anytime you gift an asset that is appreciating in value, the key is that you're removing that appreciation from the taxable estate. So it's not going to grow inside the estate; it's going to grow outside of the estate. Same is true of income producing property. If there's rental real estate that's being gifted to, let's say, grantor's children, then that real estate is gifted to the children. The children now own the income stream in addition to the property, and that income stream is now outside of the taxable estate of the grantor or donor of the gift. So a huge benefit of gifting is the ability to remove not only the principal of the gift, but that future growth and appreciation or income stream.
Well, it sounds like quite an opportunity. Well, beyond that, beyond the gifting of appreciating assets, what other gifting strategies? What are the best gifting strategies in your mind in the current environment?
Yeah, in the current environment, well, you just mentioned one of them, and that is if there is a property that is, for some reason, the value has decreased, Well, that's an opportune time to be able to gift that asset out of the estate when the asset value is depressed. And when it goes back up, let that increase in value occur outside of the taxable estate. The other one is, frankly, pretty simple strategy, but it is one of gifting to an irrevocable life insurance trust. And it is an opportunity to use the gifted dollars and leverage them up into the much larger sum provided by a life insurance death benefit. So you're taking the small amount that's being gifted, again, under your previous example, when you've got a married couple who has the potential to gift $180,000 to a trust, well, they could gift that $180,000 to a trust and potentially leverage that $180,000 that's being spent on a life insurance premium each and every year into a very high sum that ultimately can be made available to pay any estate tax liability, provide liquidity for the estate as is needed. But it's a great way to be able to, again, leverage up the gift.
Got it. And even in a situation where there isn't a particular concern about the federal estate tax with the exemption as high as it is right now, there is still value in gifting those dollars out for the simple purpose of leveraging the premium or leveraging those gifts into a life insurance, much larger life insurance death benefit is what you're saying, correct?
Absolutely. And especially that can be compounded even further when we're talking about a survivorship life insurance policy, which is going to insure both spouses' lives. So yeah, you're going to pay a lower premium because it's insuring two lives. And on top of that, two people have to pass away before the death benefit pays out. So in the end, it means that you're going to get a higher death benefit as well.
Got it. And how does all of this change after November 3rd? Just
kidding. I wish I could tell you.
Just kidding. We'll deal with that at the time. Well, Brian, thank you very much.
That'll be days and minutes. We'll have days and minutes then.
Well, thank you for joining me, Brian. If anybody has questions related to the federal gift tax, please direct them to Brian. If anybody has additional questions to cover in hours and minutes, please send them to marketing@buiusa.com.